Hi folks, welcome to Estate Planning for Parents of Special Needs Kids. My name is John Fraker. I'm an owner at the law firm of Ainer and Fraker. We have offices in Saratoga and Oakland and serve clients throughout the greater Bay Area. So here's a little bit about me. I graduated law school from the University of Southern California in 1998 and was subsequently admitted to practice law by the State Bar of California. In 2007, I received my LLM and tax degree, which is a fourth year of law school for those who didn't get enough law school the first 3 years. This program focuses exclusively on tax, estate planning, and related topics. One of the most important things in our biography is not actually reflected here, and that is before we started our law firm in 2002, both myself and my business partner Leon Ainer were professional trustees at professional institutions. What that means is before we ever drafted our first living trust or estate plan, we had administered and been trustee for hundreds, if not thousands of them. That means that we have seen the good, the bad, and the ugly from all the different law firms in the Valley and the Bay Area, and we know what works and what doesn't work for your family. So here are two key questions that every parent must ask when thinking about estate planning. Number one, who will take care of my child with special needs if I'm unavailable to do so? And number two, how can I ensure that there will be enough financial resources to meet their needs after I'm gone? So when thinking about who would raise your children if you're not able to do so, you're talking about choosing a guardian. Let's look at some of the top criteria for how you would choose the best person to do the job. Number one, a guardian should be known and trusted by the family and as well by the children. Number two, they should possess the time, skill, and emotional ability to handle the job. Not everybody's up for the full-time job of providing assistance to another person's child, so it's really critical that you choose somebody who has a good handle on it. Number three, they should be on good terms with the trustee. That's assuming that you're using somebody else to manage the money of the estate. Number four, they should be familiar with and able to fulfill the legal requirements of the job. Guardianship is a legal office, which means even though you nominate them, they still have to be confirmed by the court. And the court's going to look at their background and make sure that this is a suitable and fit person, but they are going to follow your direction on this. And then number five, the person you choose as guardian should obviously be financially stable and not looking at the money that you're leaving your children as a way of supplementing their own income. So when addressing the question of will I have enough money to leave my children, let's look also at some of the government assistance programs that are available to families with children with special needs. The first is supplemental security income. The second is Medicaid, which is a federal program. Here in California it's referred to as Medi-Cal. 3 is Social Security, and 4 is Medicare. These 4 programs generally break down into 2 larger categories, needs-based and non-needs-based government assistance. So there are 2 main non-needs-based programs, Social Security and Medicare. We refer to these programs as entitlements, and the reason that they're called entitlements is that you've been paying into them your entire working career, and then at your retirement or upon certain disabilities, you're entitled to that money which you have prepaid into the system. Number 2, the other category, is needs-based assistance. Supplemental security income and Medicaid or Medi-Cal are needs-based programs. And what needs-based means is that the government is going to look at the financial condition of the recipient of these programs to see if they qualify. So generally, if you have too many assets or fail to qualify due to lack of financial need, these other programs may or may not be available to you at that time. Medi-Cal here in the state of California is one of the best programs available to families that qualify in providing assistance for medical coverage. Let's look at some of their benefits. It provides coverage for medical services and treatments, prescriptions, hospitalization including nursing care, psychiatric care and dental care, medically necessary durable medical equipment, and long-term nursing or in-home care. However, Medi-Cal, being a needs-based government assistance program, has some restrictions in who can qualify for the program. So these are a list of some of what they call asset restrictions, that you cannot have more than these minimum amounts and still qualify. So the first is $2,000 in liquid assets or $2,000 in household goods. A residence that is occupied by the disabled person does not count against the asset restriction. One automobile that belongs to the special needs individual, and a term life insurance policy or a prepaid funeral in an irrevocable funeral trust. These are really minimum insurance amounts. They are not larger life insurance accounts. If you have more than these assets, you are most likely going to be ineligible for Medi-Cal unless there's some other exception. In addition to Medi-Cal's asset restrictions, they also have income restrictions. So first and foremost, there's the dollar for dollar offset of Medi-Cal payments against any other income received by a Medi-Cal recipient. Therefore, if the SSI or Medi-Cal benefit is reduced to zero because other income has offset it, then the recipient will lose their SSI and Medi-Cal. Which brings us to the primary challenge facing families in these situations: how to provide maximum welfare for your children without also jeopardizing any available government assistance. One of the key estate planning vehicles that helps families with special needs provide for their children is called the Special Needs Trust. There are a couple of key features of the Special Needs Trust that really provide tremendous benefit. First and foremost, trust assets are held in the name of the trust and not directly in the name of the beneficiary. You generally don't want to leave assets directly to somebody who is receiving government assistance that's needs-based, or they may forfeit those benefits. And that's where the Special Needs Trust helps you. It is the one that actually holds title in the assets, and the child continues to be eligible for those programs. And that's because, number two, trust assets inside the Special Needs Trust are generally considered not available resources for SSI or Medi-Cal purposes. Now, the magic words there are available resources. A child can have resources, but if they are considered not available, then they do not count against those Medi-Cal asset or income limits. Number three, the Special Needs Trust pays for supplemental needs only, not for necessities that are otherwise covered by SSI or Medi-Cal. This is one of the key features. Simply having a Special Needs Trust is not enough. It's also how it is managed to make sure that those things that are being paid for are things that are not covered by SSI or Medi-Cal. So now that we've talked about the way that a Special Needs Trust works, let's talk about some of the areas of permissible coverage where the Special Needs Trust can actually pay out money for these things. Now, this list that I've included here for you is not intended to be an exhaustive list, but it's intended to give you an idea of some of the things that your Special Needs Trust can pay for. Now, the most important thing to know about this is that the Special Needs Trust can actually not pay for anything that Medi-Cal pays for itself. That's very, very, very important. So you need to know that not only does the trust have to have the language restricting the trustee from paying for things that Medi-Cal pays for, but it's also important that when you choose a trustee, they understand that they cannot distribute money for an impermissible reason, because that would jeopardize your child's benefits. Now that we've seen how important it is to make sure that the trustee is only able to distribute money for the correct reason, let's talk about some of the characteristics that would make an ideal trustee for a Special Needs Trust. Now, the ideal trustee should understand public benefits law as it relates to Medi-Cal or SSI or other programs. They should understand the Prudent Investor Act and the Income and Principal Accounting Act. Those are two laws dealing with the investment of the trust proceeds and the way that money is distributed to beneficiaries. They should understand federal and state tax laws. They should keep accurate books and records at all times. They should be bondable, which means that they can get a surety bond to cover your child in case the trustee loses the money unforeseeably. They should at least live as long as the person that you've chosen them to be trustee for. So if you have a child and you've chosen a Special Needs Trustee for them, and that person is in their 70s or 80s or even late 60s, it's possible that they would not be around at the time that the child still needs the money. If a child lives 2, 3, 4 decades and somebody's in their 70s, it's likely that they won't be there to finish the job. And most importantly, the ideal trustee should have the best interest of the beneficiary at heart at all times. So you can either use a family member trustee or you can use a professional trustee. Or one of the best ways of doing it is to have a family member trustee who has the authority of hiring a professional as a co-trustee. When you look at all these requirements of an ideal trustee, it's rare that a family member or a non-professional would be able to meet all of these. But if you set it up so that they can hire a professional to take care of these requirements for them, your family is going to be in great shape. Now that we've talked about what a special needs trust does and what an ideal trustee looks like, let's talk about the funding process. How are we going to make sure that your assets wind up in the special needs trust for the benefit of your child? Well, first off, you can set it up so that it receives the proceeds from your estate. So when you leave money to a child, it's important not to leave it to them in a standard non-special needs trust or will or other device. It's important that the proceeds from your estate go directly to the special needs trust for the benefit of that child. It's also important to note that you should only leave liquid assets to a child in a special needs trust, because the special needs trust has so many requirements of making payments for things. It's important that the money not be tied up in a non-liquid asset such as real estate. And finally, you can set it up so that your special needs trust receives the death benefit of a life insurance policy that you have. Again, you want to make sure that you don't have any policies or other accounts that pay out directly to a special needs child. They all have to go into the special needs trust so the child's benefits are not jeopardized. Which brings us to the next question: why should I bother with all this planning? It sounds like a lot of hard work. Well, let's compare two families that are very similar, one which did the special needs trust planning and the one that didn't, and let's see how it goes for them. The first family is a family that did special needs trust planning. They have about $250,000 in all of their assets, and then they also have another $300,000 in life insurance policies that paid out its death benefit to a special needs trust. At age 18, their child begins receiving $20,000 a year in government assistance, and the special needs trust is there to supplement all of the government income and pay for all of the extras not paid for by the government. Their child remains financially secure, and at their child's passing, all the balance or residue passes to the remainder beneficiaries, other family members, or charity. The second family did no special needs trust planning, and therefore the beneficiary received a $300,000 inheritance which just went to a standard savings account. However, this rendered them ineligible for needs-based governmental assistance. This child had $30,000 a year in cost of care, which is being taken out of their account. And after 12 years, their account was completely depleted. All $300,000 was gone. Now the beneficiary at the end of this time must now reapply for government benefits now that they qualify. However, these benefits are now the only benefits available to them, and they have no money available for extras. So a special needs trust really goes the extra mile of making sure that your child is taken care of. So now, if you've decided that you want to move forward with special needs trust planning, what are some of the important steps to take? Well, the first and most important step is to consult with an attorney who focuses in this area of law. Then, after that, you can apply for all the applicable programs for which your child may be eligible. You can determine the need for a special needs trust. Will there be adequate funding for all children? Do we need to consider life insurance or other ways of making sure that they are provided for? Are all assets safeguarded so that they don't jeopardize government assistance? You also would choose the guardian for your children. You would select future living accommodations, and then you would evaluate all of the available financial resources. Again, you're going to look not just at the size of the estate, but its liquidity. Are there assets that can be turned into cash in the special needs trust to pay for the things that the trust needs to pay for? And lastly, is there an adequate amount of life insurance? We hope you've found this presentation useful and informative. The next step, if you'd like to move forward, please feel free to contact us at 800-775-7612. You can also visit us on the website at ainerfraker.com. We'd love to hear from you. Have a wonderful day.